Hello, welcome to McBoss Capital channel. My name is Michael Chu. This video will recap the market this week for the week ending January 10th, 2025. Happy New Year to everybody. Hopefully everyone has a good rest and the market has started out the year pretty strong the first couple of days, and then this week we really fall back quite a bit. And most of the index are hitting new lows right now, new recent lows. So the IBD has changed their outlook to market under pressure, and then on Friday, pretty much they don't use those signal anymore, like market correction, but they use allocation. Like right now, you should be in the 20 to 40% allocation mark. Generally, I think that's used to be the old market in correction. At least that's how I see it. Basically, we have less than 50% chance of success now. Um, and we saw two distribution days coming in this week. So that's not a good sign. And also on the accumulation distribution side, based on the stocks I follow or track, we are seeing way more distribution than accumulation. Now you can see there is still some accumulation, so it's not every stock is like going down. Um, and then there's also more industry groups also being distributed than accumulated. On the sector side, we see technology are pretty much this is the net accumulation distribution. So negative means it's net distributed. So there's way more stocks, net 34 stocks distributed, after you subtract the numbers. So you can see retail also coming under huge distribution here. Industrial stocks, 80 of them at least net distributed. And then health was doing okay earlier in the week, but it also fall back on Friday. And you can see energy is the one that was sustainable the whole week. And it has been since the new year, actually even the week before the new year. So it's been showing strength on the energy side, right? Most of them are oil and gas. There's some other plays like alternative energy also doing well. And then financial really got hit hard on Friday after the jobs report. You can see the numbers here really high, minus 137 net distribution. So that's accumulation minus distribution, and we have a negative 137, which is quite high. The last time we had those high numbers was back in that week of the Fed meeting, December 18. So yeah, looking at the Nasdaq composite index chart here, we've had this prior 14 weeks up rally, but we have since now top right here, and we are now in the fourth week of a downtrend. Now this week, we started out kind of strong. You can see we were up earlier in the week, and then by the end of the week, we actually closed at a new recent low here. So this is a very negative trend because that just tells us that it didn't make a higher high as well. Now it makes a lower low, and so this is pretty much a beginning of a downtrend. So we gotta be more cautious here. The other thing on the daily chart, you can see here, as we mentioned, we did have the first 2 days up, and then actually no, we only have Monday up because we didn't have Thursday. So Thursday was off. So you basically bounced from last Friday and then into Monday, but then we kind of reversed that. And the worst thing about this technical picture here is that it has clearly broke the 50-day line average, which on the weekly chart is a 10-week moving average. So this is a pretty bad sign of possible what's to come because it has broken that trend line at the lows as well as the red line here. So it's possible, like we did have lots of volumes, that's why we have those distribution days. And it is starting to look a little bit more scary now because when we starting hitting new lows, the sell off could accelerate, right? Less people are willing to buy until they see certain like bounds that are more sustainable, like upside reversal day or something like that. So I would just wait until we see something like that before we even try to nimble more. But with that being said, a lot of the mega caps also not doing so well. But on the underlying growth stocks I follow, which I will have in the next video, um, that I do every week, the list of growth stocks I follow, it did improve in terms of the technical aspect of a lot of growth stock. Of course, there's still lots of growth stocks are down right now, obviously still going down. But in terms of the number of growth stocks, like I think the week before we have so little stocks in the uptrend, meaning like they're over their short-term moving average. But this week a lot of them have climbed back, which is surprising. So from that aspect, like there is some improvement on the underlying picture. But again, every growth stock obviously gonna not trend the same way. So it is still a stock picker's market right now, especially at this moment, when there's lots of volatility. So yeah. Anyhow, I'll talk more about that in that video. But here, I think from a market index perspective, it's definitely looking like it wants to possibly have more downside. But again, it's too early to tell whether this is this is only one day below the trend line here. So it's still early to tell. Like even on Friday, you can see it comes back halfway point. Not quite, but like you know, yeah, not quite like maybe 2/3 or something. If you count the gap down. So yeah, 1/3 on the bottom range. So yeah, this is not looking good so far. Um, Looking at the equal weight Nasdaq 100, it hasn't broken to new lows yet, but we did slide all the way to near the lows here. So this one has 200-day moving average here. We did break it last time in August, so I wouldn't be surprised if we break that again and then have a couple of days sell off like here and then bounce back. So that could happen as well. So on S&P, very similar chart. We have this uptrend and then we are actually on the fifth week of a downtrend right now. And you can see this one already undercut the red line, which is the 10 moving average even the week before. And this week we actually make closing low, new closing low. And on the daily chart, you can see that very clearly as well. So the problem with this chart, you can see, if we don't find support at the previous lows here, um, it's more likely it will try to test those lows. And then obviously we have the 200-day coming up as well. So that's another potential support line. We'll see. Those are the two. But yeah, this chart looks very similar. All the index are on downtrend right now. I think the most negative is right here when it kind of surpassed it and fell. I think this tells a lot about the current market conditions. It's usually not a good sign, as no investors want to pick up at this level. So, but yeah, when things get oversold, they always bounce back. So always watch short-term moving average. I usually use the 10-day. So this is the slope of the 10-day right now. So it could easily bounce back to that line and then fall again, bounce back to that line, fall again. Eventually, like we could come down to the 200-day like this here right here. So we'll see if this is gonna happen. So this is the equal weight S&P 500, also making a new low right here, closing low. So again, we have broken this lows here, support level, and it's more likely now, like because the 200-day is so close to it, it's more likely that it will break it. And I think from a technical perspective, if it breaks it, we will probably see a lot of trigger stops and all that happening, because a lot of institutions do use that line for long-term support. But what we want to see if it does break it, like see how it reacts by the end of the day. Because if it does come back up, usually that could be a signal of a short-term bottom at least. So on the Dow Jones, it looked very similar. You can see it also broke to new recent low, and now we could be heading towards this 200-day moving average. And probably the worst picture of all of the major index, Russell here, we also broke the recent low as well. You can see we are this one looks like a more sharper downtrend than the other ones. It's like literally a 45-degree angle. So small caps are taking the brunt of selling for sure. We do have this 200-day moving average coming up. And so this is a very important line as we found support many times here. You can see right here, right here, right here. So we are literally near that line right now. So watch how it reacts. Same thing, just like yeah, see how this reacts. If it cuts through and if it falls back and close at the bottom, this is very negative. But if it falls through and then bounce back, then maybe there is a short-term bounce here that could come back to like at least this level here. So we'll see. So one of the secondary indicators that is might be good to watch is the CBOE volatility index. Uh, so in December, after the Fed meeting, we had that one big down day, like really big down, few percent point at least. And then here we started to see it rise, but it's rising very slowly. Despite a lot of selling recently, you can see it just hasn't had much volatility in terms of like washing out the investors here. So we didn't even hit this level, like this range here. So I feel like the market shows no fear right now, which is not a good thing because generally the psychology wise, like the market tend to go the opposite of what everyone thinks. And right now, we're seeing this volatility index. I'm just not sure we hit the bottom yet. And so I think there will be more selling coming, just because we haven't seen much fear in the market. So this is from IBD newspaper, and we usually follow the lens decline line. This is NYSE at the bottom, S&P 500 at the top here. So we know S&P 500 just hit like this low here, recent low. Now this line here are pretty close, like to the lows here as well. So it's not uh, uh, too many, like it's not further down. Is what I'm trying to say. If you look at Nasdaq, Nasdaq also hit a new low, but look at where Nasdaq decline line is much lower. So the techs are definitely selling off harder, right? Because there's just way more stocks selling off compared to S&P 500. There's like okay, right? Like it's balanced, right? So relatively the S&P 500 stock seems stronger than the Nasdaq stock as well. This is the Investors Business Daily newspaper, and this is a good chart because it's just easier to see. We have non-farm payroll coming at 256,000, which is much higher than expected, and this unemployment rate also dipped to like it dropped by 0.1%, so 4.1. So as you see, the trend overall is still going up, but recently we are seeing some stability at this level, which is a good sign for the economy. Average hourly earnings rose 3.9%, so also not too high. So everything looks really good, but obviously this will, or because of this rosy picture, the Fed might really not cut too much this year. So that's why the market didn't like that because of that news here. So it's kind of like you have good news, but good fundamental news, but not good for the market because the market is expecting more cuts, and that's why the Russell has been underperforming quite significantly recently. So this is the IBD Innovative 50 ETF here. We are on this clear downtrend line. On Friday, we did see drop a little bit more, but it did close in the middle range, just like the index did, and it hasn't hit the new lows yet. So again, so there might be, like I said, seeing some growth stocks are holding up or even moving up, but there's still overall there's still more down stocks than up. So, but at least we haven't hit new low yet. So that's a good sign from that perspective. So on Friday's job report, really pushed the yield much higher. We are now at 4.77%. It is getting closer and closer to the 5% mark, which this is also part of the reason why the market has really come under a lot of selling pressure because this yield just keep going up and higher, and this will hurt over the long term might hurt the economy because this will hurt the like borrowing rates and stuff. So this is what's also causing some of the pain here. The US dollar continued to climb. You can see it's making new high on Friday as well. So and the oil and gas prices continue to climb, and you can see we made a new high on Friday on much higher volume. This is the oil price here typically. So yeah, so energy plays are starting to do good, and we'll see also in my growth stock list that they dominate a lot of the top percentage performers right now. So that's might be worth looking at. Now, obviously, the caveat here is, with Trump coming in, they possibly could try to push the energy prices lower. So things could change very fast. So just put that as a word of caution there. So we have the Fed meeting in December 18, which is a down day, and then we have this December job report that just came out yesterday on Friday, another big down day, and then next week we have producer price index on Wednesday, and also the CPI as well. So that is going to be another big day to see how the market reacts. Obviously, the market doesn't want to see inflation come back up, so that will be very important uh, because that's the one thing that could hurt this current policies right now and the economy. And then Thursday we have U.S. retail sales figure, and then the earnings are starting to kick in. A lot of banks, right? J.P. Morgan, Goldman Sachs, we have Wells Fargo on Wednesday, and then we also have Taiwan Semiconductor. We also have United Health, and then we have more banks on Thursday, Morgan Stanley and Bank of America, and we have Schlumberger as well reporting on Friday. So this is the semiconductor ETF, and we had this huge cup, and then we pretty much couldn't break out from this cup, and we went into this sideways pattern, and we can draw this line for you here. You can see this pendant, and it did break above the pendant, but look at what happened after. It reversed, and it came all the way back down into this pendant, and now we are at the lows of this pendant. That's crazy, right? Because this is basically a failed breakout, and so far it has shown lots of weakness after this breakout, and that's really negative. Now I'm starting to think it's possible that this will break this long-term pendant channel line at the bottom, which coincides with this 200-day moving average. If we go into the weekly chart, we have this 200-day moving average that has found support many times on this index since pretty much the bull started, back in like 2022, late 2022. So I don't want to say this is, do or die, but it is kind of look like a do or die, right? Like this channel line or this trend line is so important, and we failed this trend line, and again, we're not exactly at the 200 day yet, but if we do fail this trend line, like things could change significantly. So watch for something like this upside reversal where it went below it and come back up by the end of the day. That's a good sign. Or if it does fall below it, watch for a quick reversal the next day or two. That way, it will continue to bounce back. So that's what we're looking at. We have found support quite a few times now, right? Right here, right here, right here, right here, right here. So we constantly find support, which is not bad. It's definitely a good thing. But like I say, I feel a little bit weird that it failed this breakout and that it reversed so fast, rather than trying to hold the upper channel line here, but it didn't. So all these are negative, right? NVIDIA follow very similar pattern. You can see I tried getting in here on here, and then the next day it went up, and then you can see here I had to sell on the day that it was down big that day and reverse, and you can see now we're back at the bottom of the channel line again. So um, Nvidia looks slightly better because it's not nowhere near the 200 day, like it's still a little bit further away. So this one has more room to sustain if the whole semiconductor group breaks down. This will break down too, but at least it's still way above the 200 day line. On the software side, it doesn't look good. This downtrend line is like 45-degree angle down. Like this one definitely shows a lot of selling. And you can see all this down day red volume is much higher than the buy days. Like so, it's just lots of distribution right now in this group. So looking at Microsoft, all the software guys probably have similar patterns on the downtrend right now. We do have a bottom channel line here, roughly around that area. So it's still trying to stay afloat here, but we are really testing the lows right now of this channel line. And we are below both, right? The red line and the black line, which is the longer term moving averages. So for Microsoft, I'm very surprised what's happening to this stock, given that this is an AI driven, probably the best AI software stock in terms of its ability to capitalize on that, but it hasn't shown that so far. on both in terms of this, like they haven't announced any revenue numbers from AI at least, and it's been so long now, right? And they haven't announced anything. So it makes me really wonder the potential of like AI revenue can help them grow again. You can see the numbers are now in the low single digits earnings growth. So that's why this is not on my radar, but I just want to point this out because I still think Microsoft is could be the leader in AI, but so far they haven't been able to capitalize on it, and that makes me think about the overall AI driven economy, that it may not be at least not now that it has been able to generate new revenue stream. So it's something to take into account because a lot of AI stocks may be overvalued right now because of with high anticipation of the growth, but we haven't seen it so far. So at least not from Microsoft. But I believe in Microsoft because they have all the enterprise businesses in the world using their stuff. So why can't they capitalize on it is really puzzling. Amazon also on a downtrend, but this one looks a lot better than Microsoft. You can see we have recently broke out. It failed the breakout, come back, pull back, and then it bounced again, and then it's been trading really tight, right? It did kind of undercut the recent low, but it closed pretty much near that level. So this one looks a lot better. It's still above the red line 50-day and 200-day. Meta also looks good. It's also above the red line. You can see it bounced on Friday on some TikTok ban news, right? Which is possible, which is coming up. So TikTok ban, it will help Meta and on other social platforms as well in the US. So this is probably the reason why it bounced on Friday. But overall, the pattern is trading very tight, which is really nice. Going to the weekly chart, you can see how it's just building a nice base right here, and then another nice base right here. So if it does break out, I think Meta could have another chance, to run, especially if TikTok is banned. A lot of the people will start moving to other platforms. Google also looking pretty good. Like we have this nice handle breakout here. It went up and then it kind of tried to find support at the 10-day and 21-day, and so far it has found support. And volume is not too bad on the sell side, right? It's not above average. So this is also trading very tight at near this level. So yeah, surprisingly, some of these mega caps are doing much better than I thought. So they're holding pretty tight, and you can see on the weekly chart, there's lots of volume in Google in the last month or so or two, or at least on the upside. I forgot to mention that Meta also had signed a deal with eBay yesterday, which benefit eBay for sure because of the antitrust laws in Europe. They had to show their listings. So the eBay, it's surprisingly a very strong growth, right? Like I mean, not super strong, but it's still growing, like in the low teen to high single digit. Looking at the daily chart, it did fall back quite a bit after that announcement on Thursday. So I don't like that, and so the sales look like there's a lot of overhead selling, because if you look at the weekly chart, you can see there's lots of overhead here. So it still seems like there's a lot of selling, but it's possible that this stock could find support because this news is going to benefit them a lot, right? So they bounce high that day and then gives back a lot. But like I said, this is the 10-day moving average. It's probably going to start coming up. So let's see how it reacts around that level. So Apple again was one of the strongest, was one of the last strongest mega cap stock before the sell off, and it has finally fallen. And when it fell pretty fast, and now we are on this slope line. So this is very negative. The slope line is looked at more than 45-degree angle, and also it fell below the red line on Friday. And that's also another negative sign, although it didn't close at the bottom, but it still closed below it. So Tesla continues to see selling pressure. The trend line looks like this right now, also very strong, 45-degree angle. And it couldn't surpass this short-term 10 green line, 10-day moving average. So that's always a negative. Whenever it comes near and it couldn't push beyond that, that always means there's probably more selling. So now 50 days is coming up, so we might see some support at this level as well. So let's see how it behaves around. If it can pass the upper channel line, which is the 10-day, and it couldn't, if it finds support here, then maybe it'll just stay here for a little bit. But if it couldn't find support at this red line, then can easily fall and fall hard, because that's a huge support line as well, right? So in 200 days way down here. So yeah, we'll also look at Netflix because it has done well before this sell off recently, and I was trading it and it looks really good, and now it has fallen, and it topped roughly around here, and this is the trend line right now. Also not as steep, but you can see Friday accelerated. I'm not sure if there was any news, but this is a really negative sell-off on that day because look where it gapped down below the red line, plus it closed at the bottom. This is like double negative. So not a good sign. So in summary, based on what we've seen so far, have we hit the bottom? Probably not, because we just haven't seen enough panic selling yet. So so stay tuned and just see how the market reacts over the next week or two. And earnings news coming out is going to play a big role in the marketplace, especially next week will be mostly financial. The financials have taken a lot of heat lately because of the yield and all this recent news. So let's see if we can find support soon because the financials are a big part of the market. And if they don't find support, and we probably are going to head down much lower. I feel, right? Because like I said, the financial play a big part in it. And we kind of have broken this long-term channel line here. Like not by much, but we have like this channel line here. So that's why this is not a good sign, and we could come down to the 200-day before we find the next support level. So let's see how it goes. Thank you very much for watching this video. If you like, please like and subscribe and comment anything you like and anything you want me to look at next time. And please stay tuned for my next growth stocks list video.